Greeting to everyone. Welcome to Build the Future Academy. If you are new in this channel, please subscribe so that you can get more access to the video that will be uploaded in this channel. Alright, today let us continue with our chain. Last time we did the bad debt, so now we are going to continue to the interest on fixed deposit, or if you like, you can say interest income. So these are transactions that need to be recorded in our income statement. So this tutorial is going to assist you to know how to calculate the interest on fixed deposit or interest income that need to appear in our income statement. So let's start with information A in this tutorial. Alright, so this information again, we are going to get it from the trial balance. This one, you get it from the trial balance under the balance sheet account section. Okay, now let us go straight to the information that is given to us. The information that is given to us is saying the interest on fixed deposit amount to 5,250. So this is the amount that was received. This is the amount that was received, and again this amount you are going to get it in the trial balance as well. Okay, let us continue. The fixed deposit was invested on the 1st July 2018 at Nadu Bank at 7% interest per annum. The financial year end on the 28th February, meaning this is the financial year end for this business. It's ending on 28th February 2019. Okay, so now in order to solve this problem first, we need to use our timeline or accounting period. So as we know that our timeline is ending on the 28th February 2019, so I'm going to use this timeline, meaning since it's ending on the 2019, meaning started on the 2018. Alright, so they said the business made this investment on the 1st July 2018. So let's go straight to between June and July. So this was the 1st July upward. So we are going to calculate all these months that were affected for this investment. So we have 1, 2, 3, 4, 5, 6, 7, 8. So we have 8 months. So therefore we are going to need the interest for only 8 months, because this is the interest that was incurred in this financial period. So what we are going to do, we are going to take the total or the balance of the fixed deposit, 150, and then we are going to use the percentage, the rate, the interest per annum. We're going to say times 7 over 100, and then again we're going to say times month. How many months do we have? We have 8 months divided by 12, and then we are going to use this calculation to calculate the correct interest that was supposed to appear in our income statement. Alright, you can use the calculator to confirm our calculation. Times 50 times 7 divided by 100, and then times 8 divided by 12. So I'm getting 7,000 rand. So meaning this is the total expense, not expense actual, but the total income or interest income that was supposed to be recorded in our income statement. Alright, so how do we record this information in our income statement or statement of comprehensive income? So let's say we are preparing the income statement. So we are going to say the interest on fixed deposits. Okay, let me just change the color. Let's say we are going to say the interest on fixed deposit. In our income statement, we are going to write interest on fixed deposit. You can write it in full, and then you open bracket. Let's say these are bracket, and this is the total. The total is 7,000, because we are supposed to receive the interest for only 8 months, meaning 7,000 was supposed to be received. Now the business had received this amount during the financial year, meaning the business had already received 5,250. So what is the amount that was outstanding or interest that was outstanding? Then we are going to take this 7,000 rand and subtract this 5,250. Let me show you these workings. So we are going to do these workings separately. 7,000, and then you subtract the amount that was paid so that you can get the outstanding amount. Alright, let us get the outstanding amount. We call this outstanding amount an accrued income. Accrued income. minus 5,250. So the outstanding amount was 1,750. So this is the accrued income. So this is the accrued income. So we need to add this accrued income as an outstanding amount. We call it an accrued income. Accrued income. So we are going to add this accrued income here, 1,750. So this is how we are supposed to record the interest on fixed deposit in the income statement. Thank you so much for watching this video. We are going to continue to information B in the next tutorial.